Yeah. I was just sorry.
Oh, we're in the middle of
jabbering away.
Yeah, everyone. Good to see everyone here. July 25th, 2024. And got some interesting things to talk about today. Got some trading to do. I think we're gonna have a good session. And of course, Richard is back. He's joined us. He's back from his trip. So good to have you back.
Yeah, thank you.
Yeah, more people piling into the room. So
it was a successful trip. I got to be featured on the Thai news.
The Thai news,
yeah, which is normally a bad thing for when Westerners get featured on the Thai news. It's normally because they're being arrested for something horrible. Not this time.
Okay, you managed to avoid jail time, did you? Good, good. Excellent. Yeah, we should probably share your. Well, it's all in Thai, so I mean, maybe we've got some Thai viewers. I don't know, but all right. Some more people still rolling in. Let me just set these slides up.
Thank you. Glad.
For those of you that are new, I'm Shane Ogla, along with my partner Richard Hodges. We are the Rogue Traders. You can check us out if you care to at roguetrader.academy. And this is Deribit Live. We do it every Thursday. It's a lot of fun. We do some trading. We do some talk. Sometimes we talk some smack and nonsense. Sometimes it'll actually make sense. Just depends on the day, I guess.
Normally more by luck than judgment.
Yeah, well, even a broken clock, right?
Correct.
All right, so trading options of the pros. I think I'm just going to go ahead. Some people rolling in, but let me just get started on the slide presentation. Actually, let me make the image a little smaller because it'll block out some of the numbers. And what are we talking about today? Well, we've got this, I call the Trump vol differential, but it's just a volatility differential that you will see from time to time in the markets for different reasons. And we could talk a little bit about that, but we've got this big vol differential. And it's funny, I've been so busy. I've actually had kind of a crap week. My account, my.
Why don't you just vent your concerns to the world here, Shane?
Well, no, I'm leading to something. Well, I was before you distracted me. So discretionary accounts are just kind of sitting there. They're not moving up or down in equity. And I was like, oh, man, all week I'm not making any progress. And I had some FX trades. They're kind of going against me. It's like this week is just not working out for some reason. But I think this might be a good opportunity for us to either make money or stave off a loss, which is just as important. So let's move on. All right, so first we're going to review our synthetic miner trading account. This is an account we started here at the end of February of this year, so it's been like 180 days or something. Half a year. And the point of this account was to generate more Bitcoin because we have a long-term bias that Bitcoin is probably going to appreciate in value. So we want to accumulate as much Bitcoin as possible. We didn't want to do it by mining, so we want to use options to generate more Bitcoin, which is something you can do with Deribit. So these are the results today, to date. So it's been 21 weeks. We started off with 0.0825, we mined 0.0247. So we've increased our Bitcoin by 30%. I'm actually a little bit disappointed because I thought we'd be much higher. We had an event which knocked us back, which we've pretty much recovered from, but I'm still a little annoyed. Maybe I'm just annoyed at everything today. I don't know. But
30%. Ask any of these guys who all love Bitcoin if increasing their stash by 30% is a bad thing, and not one of them is going to say yes, right?
I don't know. Maybe I'm just.
I mean, imagine that you had like 1 million Bitcoin and you've now got 1.3 million Bitcoin. You'd be pumped.
I would want 1.5 million Bitcoin. I'm a high maintenance man.
It's very important. This is one of the lessons I teach people in my personal classes, and from personal experience, it's very important to know when you've won.
Game's not over until I die, Richard. All right. So starting cash was 74.66. No, that can't be right. Starting USD cash, it was 5,000 something. So we'll have to correct that number. So, but here's we can annualize the return. This number is going to fluctuate around a lot as we up and down. When we first started, we were up 3,000% or something.
The starting cash was $5,000 because that was the whole point, was take $5,000 and see how many Bitcoin you can make with it.
Yeah, I think it was like 5,200 or something like that. So, but today we're up 99%, down a little bit from last week. But against hodlers, hodlers are up 4% in grand total. So let's just take a quick look here at the chart. This is the Bitcoin return. I don't know what you're laughing at, but
that massive instantaneous drawdown we had looks quite humorous. That could have been really bad.
But look, hey, we recovered most of it. Down a little today, but it's looking pretty good in terms of Bitcoin return. And here's our US dollar return versus hodlers. So the red line is hodlers and the blue line is us. And again, hodler is the red line. It's never going to change. It's always going to be there because you're hodling, right? You bought your Bitcoin back on February 29th. You're just going to hold it forever, right? Okay. So that is that. Let me stop sharing slides here, and I'm going to share my screen. Let's take a look at Bitcoin, and then we're going to probably do a little bit of trading. We've got some adjustments we want to do in the synthetic miner account based on this vol differential.
Well, let's show the vol differential before we trade it, because so people know why we're trading.
Yes, for sure. Yeah, and I just will mention, if anybody wants to follow us trading, we trade other accounts as well, different strategies. We do that every day. You can check us out on Patreon, Rogue Trader Academy, or just go to roguetrader.academy and join in. Come and have some fun with us. What was I going to do? Screen share. That's what I was going to do. Let me share my entire screen. No, unshare my window. Here it is. Bitcoin. You see this? See my chart? Yep.
I see it.
Excellent. So here's the silly chart. Why is it the silly chart? Silly chart because I'm doing practically nothing for technical analysis. The most technical part of this chart are the unicorns. If it gets to the unicorns, then that means we're going to take significant action. But you can see, look, I do a ridiculous, just a very, very basic area of resistance at highs and support down at lows. That's it. And what I've been preaching for the last, months and months and months is goes to the top of the range. I'm selling call spreads. And guess what? It comes down to the bottom of the range. Those all get bought back. And then I sell some put spreads. Yes, sometimes it gets a bit hairy and you don't know exactly where, but that's the wonderful thing with options is you adjust your positions. But all we really did on that move up and we saw the big drawdown on the synthetic miner chart on the data. We saw that big drawdown. Well, that was that big move down. We had to make adjustments. But, once you make those adjustments, depending on how far you adjust away, all that money rolls back. We could see it all rolling back. And then we had a bit of a surprise move up, to 68, 69. I think a lot of people, including myself, were not quite expecting that. I was thinking more mid-60s, but hey, it's Bitcoin. It does whatever the hell it wants to. And we've had a little bit of a pullback here. So I'm going to take a look here at ETH as well, because let's take a look. The ETF started trading a couple days ago. Now, I noticed on the 23rd, a lot of inflows. But yesterday, when the numbers came out, there was outflows. No, I'm not going to read much into that. I don't know, whatever. I think there's just a lot of jockeying right now before the weekend. We're going to talk about the weekend events. Thanks to Nick, because Richard and I were a little bit, we were doing a live stream earlier in the week, and we're like, what the hell's going on with vols? What's going on? One of our members, Nick, who I love that guy, he's like, guys, it's Trump. I'm like, oh, yeah, I totally forgot about that guy. Yeah, pretty busy. Anyways, let me go ahead. I'm going to stop sharing my screen. Why don't we do a couple of things? Why don't we take a look at the vols right now? And we'll take a look at this vol differential. We'll talk about that. Then we can go and we can do some practical adjustments in our account, and maybe it'll make sense for your account. And I will remind everyone at the end of the show, it's a 30-minute show, roughly. Sometimes we go a bit over. We do questions, so I'll have at least 5 or 10 minutes for Q&A at the end. So if you have any questions or answers, put them in to the chat, please.
Okay, if you're quite done.
I'm done. Yeah.
Okay, so if you guys can see my screen, on the left-hand chart, we're showing the blue shaded line is the Bitcoin price over the past 5 days. And the yellow line or the orange line is the at the money 1 week vol. And the red line is the at the money 2 week vol. And the purple line is the at the money 1 month vol. These are off a constant maturity surface. And we kept thinking, okay, so 1 week and 2 weeks just have the same vols. That's kind of fairly normal. And then suddenly we've got this big divergence. 1 week out accelerating the 2 week. Now, normally that means normally it means that the market's really terrified and people are rolling short-dated positions to longer-dated positions really aggressively. But the market action hasn't sort of supported that. And so I've been wondering about that. And then, of course, Nick told us. And, and in fact, if you look at the exchange expiries rather than the constant maturity surface, it all becomes perfectly clear. And I know it'll become perfectly clear to all of you. So here on the 26th, which is tomorrow, Friday, we've got 50 vol at the money, and then 55 vol on Saturday, and then 78 vol on Sunday. And of course, Trump's speech at the end of the Bitcoin conference, wherever it is, it's full of Bitcoin weirdos, is on
Nevada, I think, isn't it?
Yeah, double weirdos. So that's at the end of Saturday, US time, so just before Sunday expiry on Deribit. And of course, he's expected to announce a sovereign Bitcoin fund for the USA if he becomes president, which is the dumbest idea on the planet, but that doesn't stop. So now the market has this terror, right, which is, what if it happens? And what if it doesn't happen? And what if he says something stupid, which he's going to? And what if he says something not stupid, which is unlikely? But if people believe, as a result of his speech, that there is actually going to be a sovereign Bitcoin fund for the US, then that probably means, massive pump in Bitcoin in the short term, and then the ultimate destruction of Bitcoin, which I can come into if you want. And of course, if he says something stupid and people think there's no way this is going to happen, then you'll see a sell-off because there's been all this anticipation. So either way, vol is high around that. And that means that vol after the actually up until today, vols were more like 70 at 2 weeks and 3 weeks. So they're being sold off. So I said right now, all the vols except for the actual Sunday vol are being sold off, and that's probably a good trade. I still think probably selling 60 vol for 2 weeks out or 3 weeks out is a good trade, right?
And historically, Richard, we've had this talk many times when we saw 100 vol or whatever was happening at the time. We every single time without fail we regretted not selling it.
Yeah, exactly.
When we did, not saying we didn't sell it every time, but because elevated vol never lasts. It can keep going up, but it's never going to last for too long.
Yeah, so, and just to put this into perspective, what 80 vol means in 3 days is astonishing, right? So if you look at the options for 28th of July, 10 delta. So there we go. 13 delta calls on Sunday, $71,000, selling for 50 pips. So you can make 0.5% by selling that, and assuming we don't go up by $7,000, 10%, 15%. That's an astonishing amount of money. And here at the money, we're looking at $1,500. So you're going to put in $3,000 to sell the straddle. So the price has got to move 5% for you to get hurt, and that's just for 3 days risk. I mean, you could just hold it for a night and then close it out. And then compare that to 2 day. So 71K is 50 bips at 3 days, but at 2 days, it's 10 bips. I mean, massive effect, right? So we're going to do some trades on the synth miner live, I think, on this show, because we've got some positions that need moving around, and it kind of it's crying out for us to do something on this. That's
yeah, and I will point out too. We get these vol differentials from time to time around events, and if you're from the TradFi space, you're going to see it in equities prior to a controversial or a big expected earnings announcement. For example, you'll see this big spike in implied vols, and then that's where that term, most people get introduced to that term, vol crush, comes from. There's this big event, then all of a sudden the company comes out, earnings are in line or less, or was disappointed, and boom, and they just collapse within a moment, and you can make a lot of money. But at the same time, they could surprise and and kaboom. So a lot of people will set up straddles because it's only going to go one way, and then they work their break even into that price after that. No, I don't think we're going to do a straddle. I think we're always going to adjust some puts. But why don't we go ahead and do that right now, Rich? Unless there's anything else you want to discuss. And of course, if everybody has any questions on this vol differential, just put them in the chat and we'll address them.
No, I'm sure they're itching to watch this trade live. So what do we have? We had we had this what we thought was a really safe put spread at 64k, currently worth 75 bips.
And all our calls are bought back. Every single one of our short calls.
Yeah. So we had these close orders in that got executed last night, or this morning around expiry. That reduced us. That removed our 68k calls for today, tomorrow. Yeah, tomorrow. So we've got 2 calls, or 0.2 of a call to put on somewhere. And I'm actually wondering whether we could play a bit of a vol differential here. So we could actually buy the 64k puts, and pay 75-ish. Leave the cover in because it's worthless, and who doesn't want free cover? And then actually sell the. Remember, we've got 2 calls to sell, so we could actually roll it into an iron condor on the 28th on Sunday.
Yeah. Okay. Let's take a look at those, because I wasn't thinking we would play both sides. I thought we'd just roll down, but let's take a look at what we can get for that.
Well, given we've got calls to replace anyway, right? And we're also at the money on the 2nd of August, so we need to sell some calls against it. So if we bought back for 75, we could resell the puts down at say 62.50 with like 6% cover for a profit already. So why wouldn't we do that? Because we just push ourselves away from the money and get better curve decay right on the edge of the vol surface. And we can sell calls as well, and we could go in at like, I don't know, plus 5%, 68k, with, I don't know, 6% cover or something like this, just to pull in another 50 bips times 2 for 3 days.
What if we bought our cover longer dated?
I mean, we could do that too. One of the trades I was going to suggest actually is buying a December or September call spread at the money, just to be a bit cheeky about getting long from the market.
Yeah, and I was even thinking, just buying the August 2nd or something, because you're paying a lot less in terms of vol.
Well, you're not a lot less. I mean, the low deltas up here are pretty expensive. 84 vol, 90 vol.
Okay.
So I don't really. This is not the time to be being clever, I don't think. Because if vols do collapse, that cover just goes worthless, and you take a hit.
Okay. Well, I don't know how crazy I am about selling the 68 calls with this thing coming up, because I think we're going to have. I wouldn't be surprised if we had a big wick up and a big wick down.
Yeah, sure, but so what?
Yeah, it could be. Hey, I'm just watching the chat here, and Nick's saying we can also buy August 2nd, August 9th, and sell December 60k puts. Yes, we could do that.
Yeah, but then they'd be uncovered after August the 9th.
I assume that he would. I shouldn't make assumptions, but he'd have to be putting cover in.
Yeah.
Let's just go ahead with this trade. Let's see. Let's because it's high vol on Sunday. Let's sell it. If it's a big
we're paying 50 vol and selling 80 vol. I mean, that's never a bad idea, right?
Never.
It's 30 vols you're picking up.
Yeah.
Okay. So let's see if we can get this for 75. No.
Done.
No, it's not traded yet.
Oh, so I heard it must have been a ding from my phone. Something.
Yeah, I've got dings going off as well. Auto hedges and stuff happening.
All right.
We might have to pay 80.
Yeah, we might have to for time's sake.
Right?
I think we have to. Yeah.
Don't be a dick for a ticking.
There you go. We're 5 ticks.
Okay, we paid 80. So then we can. So if we roll that into a put spread of net 80 plus, so we could go down to 61 and pay. That's at -5.
Hang on, are we doing this on August 2nd, or are we doing it on the 28th?
Oh, sorry, 28th. Beg your pardon. Right. It's force of habit. 62.5. How do we feel about that? And then we'd pay up to 60 for cover.
Yeah, I think that's good. And yes, Nick, yes, we can close it after the move. Yes, 100%.
And we could probably close it before the event, because sooner or later some rumor's going to come out that it's all bullshit and vol's going to drop, right?
Could be. That's why it's good to have the orders in to buy it back. But I think he was referring to his strategy of the August 2nd 9 and selling the December 60K puts. But
why don't we put double cover in here at 58, just in case it.
Wow, I've never known you to be so cautious.
Oh yeah, but although paying 80 vols for cover is. Look at this. No one's taking it with 3 bips inside, and no one's taking it.
I think we have to be patient. So, do we want to sell a call spread?
Yeah, calls as well, right?
Okay,
68 or even 67. He who dares wins, Rodney.
I get scared selling calls sometimes in Bitcoin.
They say 84 vol, dude.
Okay, let's just do it. Let's sell 67s, and with the intention that we will probably try and close this prior to Sunday.
Honest. And cover on these 67s, we'll pay. Here we are. How about we pay 40?
What do we get for 67s? 80?
We got paid 135.
Ooh, that's pretty juicy.
Actually, we could afford to pay 55 for the cover. And let's be honest.
Yeah.
95 vol though. Ouch.
Oh my gosh.
It hurts. We have to pay 55, I think.
And you're buying double cover, right?
No, single. We've sold 2.2.
Okay.
Yeah, double cover would make it a profit, and there's no profit in that.
Yeah. When you're paying 90 vol for cover. It happens.
I think we're going to have to just force that in.
Yeah.
And just in the interest of time, we're going to have to cross the spread here. It really hurts me to do so because I'm going to have to give up 8 basis points unless somebody can come in and buy that it from me.
Nick, Vladimir, Giandrea, someone, come on, just go ahead and
throw a dog a bone here.
Yeah.
And 60. What if we do 59 cover and we cross the spread? We're still getting 74 vol for the position.
Yep. Yeah. Go ahead.
I'm all right.
We're splitting hairs at this point.
The vols are so high that what happened then? How do thing go off?
Yeah, it's like free cash. It's a flow. It's like one of those game shows. You're in a booth and there's cash everywhere. You just got to try and grab it, right?
Yeah. I think we're going to give it. Yeah, we'll give up some instantaneous P&L, but the numbers still work out. Yeah. All right, so there's the thing. I think that will have improved our margin position. Yes, definitely.
Yeah,
margin use has gone down to 9%.
9%. That seems.
And we are earning $50 a day for 9% margin use. So $50 a day is about 70 basis points.
I mean, that's pretty good for a little account like this.
I think. And now just leave. I mean, I was going to say we should be fiddling around with this at the money, 64K in a week's time, but experience tells us leave it alone, right? It's massive vol. There's actually there's 360 basis points of time in there, which we're earning over 7 days. So that's 50 basis points a day, which is 10 times our target.
Mm-hmm.
So I think we just leave that one alone.
Yeah, I agree.
And then do we want to buy some wing cover just because this is going out tomorrow? Maybe just in case they do like a preemptive pump. Let's go into Saturday and see what we can get at the wings. It's expensive.
It's so expensive.
Let's see if it comes cheaper later on. I'm okay with this. Like if we had a 200% pump in Bitcoin now, we'd make money.
200%. Come on, man. You need to start writing for BuzzFeed or some ridiculous mag reg.
Well, I mean, looking at the risk matrix here, we're making Bitcoin on any move up.
Yeah.
Even though we're short calls, right?
Yeah. No, I think it's okay. Let's let it lie.
Okay, questions.
Yeah, so we had some good comments there, and I usually do it. When I do the intro, I usually say hi to everyone. I didn't do that today. I apologize. I was over eager.
I'm going to add these closing trades on this now, just in case we get a chance to get out of this fast.
Volodymyr, yes, 100 to 200% per year return is much better. I 100% agree. Core, buy 3 each cycle is enough to outperform most of the traders. Yes, it's true, but I'm like one of those fickle.
You're a degen, aren't you?
Yeah, I'm like one of those fickle wise.
We're trying to teach our people here how to be responsible traders who keep coming back to Deribit and trading in order to make sure that the exchange survives. We don't want customers blowing up trying to go for 300%.
All right.
50% a year is more than enough to retire a multimillionaire.
Okay, Dad. Obviously, you didn't watch the Fast and Furious movie series and live your life to that creed.
I think I wasted about 10 minutes of my life on the first one and never again.
I haven't seen any of them. They just look so ridiculous. Vladimir, I'm thinking that probably people withdrawing funds from Grayscale move them into ETF, but it takes some time. So I'm expecting ETH to go all-time highs in about 2 months. Yeah, it could be. It could be. Some people transferring from Bitcoin to the ETH ETFs could be. Let's see. We've got some questions over here. Question from Peter. On your website, Rogue Trader Academy, you posted the back test of a mechanical call campaign a while ago. How can I do my own alike back tests? Any accessible service?
There probably are services, but I'm not the guy to ask because I use Ferro Capital's analytics, and then we write back testers in Python to go through them. But the good thing about immersive finance is that they have minute by minute vol services going back to 2019. So the back testers can be really good for the options.
But is immersive finance available for retail?
It's an institutional only platform. So it's going to cost you a couple of grand a year to have it.
Well, a couple of grand a year is not, in the big picture. If you're moving a lot of data.
When I say a couple, it's a bit more than that.
Okay.
And it's not millions, but it's maybe 20 grand.
What about that Greeks Live? I wonder if they have, because they have a lot of. I'm not sure. I haven't spent enough time. I know actually Nick mentioned Nick again. I know he looks at that quite a bit, but yeah, you might have to look around. Maybe Greeks Live would have it. I don't know. Question from Paul: Our synth miner account, to what extent do you care about delta neutral versus directional bias in the portfolio? 3x puts and 1 call spread means always a bullish bias.
Yeah, the synth miner is chosen because it's bullish bias. We do run another one called the Dirty Bird, which we do on Patreon and for our silver and gold members, which is less biased and actually performs better. But the synth miner we felt was a reasonably good first attempt strategy for kind of degenerate people who are long Bitcoin and believe in it. As you saw from our drawdown, you do have to manage it sometimes. The drawdowns do hurt. If you wanted to run the synth miner with like 1 call and 2 puts, that would probably be more sensible.
Mm-hmm. Mm-hmm. Here's an excellent question from Johannes. I love this question. She said, in the first few episodes, you said the best moment to buy back and roll is at the money because vol is lowest. More recently, you're letting options go in the money and let the theta bleed out. What's your reasoning for that?
Unwillingness to face our responsibilities.
I was just going to say it depends on how I feel when I wake up that morning. but really, in all seriousness, if I think the move is like, I don't really believe it, I'm willing to sit and wait. And if it goes in the money, I'll let it bleed out and I'll deal with it. Other times, if I think, hey, let's say we were currently Bitcoin's at 72,000. Let's just imagine that. And I've just sold some, I previously sold some 72,000 calls. And the market ran up to 72,000. I guarantee you, I'm going to roll those calls. I'm probably going to throw them off into puts or strangles because we're so close to all-time high. If it pops through, it's going. And I don't want to deal with it in the money, call it with 95 or something stupid when I'm short at 72. But when we're in that range, I tend to get a bit more relaxed. And, if it expires in the money, it sucks, but I'm just going to deal with it. I've bled it as dry as it's going to get, and that's It's more like a perspective.
I think that's it. We kind of perceive the range to be the middle of the range to be about 65 at the minute, don't we? 65, 66.
Yeah.
So stuff expiring in the money around there doesn't feel like it's a disaster. Stuff that's kind of the thinking. Because you can always roll it into a straddle and then roll the straddle to strangle and then strangle to strangle and then it all goes out, But if we were in the money puts at 60 or 58k, then that's different.
And there are strategies which never roll. They just deal with it, and we're not running that particular strategy, but there are people that just do that, and they're very systematic about the way they do things.
But just to be clear, when I said the best time to roll is at the money, what I'm saying is because of the smile, because of the curvature of the vol surface, and it forms a smile shape. For any one expiry, the lowest vol is normally at the money, and so by rolling to a higher or lower strike, you're moving up the smile, so you're getting relatively better value. You're receiving more premium for risk on a numeric basis. But the other thing is we try to avoid rolling out beyond 2 weeks if we can. Rolling out to a month, it gives you a month to wait, and a month is a long time to have to sit and wait. And in a real emergency, we'll roll out to 3 months or longer. But if we do that, we're doing that as a storage. We're using that longer dated smile vol as a capacitor, where we're storing the risk, and then hoping to bring it back shorter dated later when conditions are more in our favour. That's something that we actually could get into more on a gold or silver chat on our with our members.
Yeah, maybe on the next weekly call we'll talk about that.
Yeah.
Let's see. Question from Peter. Return profile Bitcoin, ND or USD. Normally, I always fully hedged with dated futures, basically a basis trade. Great in sideways markets, not so well in massive acceleration to the upside. How do I calculate my return profile if I add a synth miner strategy? How do I have to adjust the option side of the strategy? For example, leverage, spread ratios to adjust for the dampened price movement in trending markets caused by the basis trade.
Whoa, hang on. Always fully hedged with dated futures. Okay, so if you're fully hedged with dated futures, then you are suffering. You've got no interest rate risk on your expiry, which probably means you're missing out on the basis trade because you're paying carry on the futures and receiving carry in the sold options. So you're giving up the extra carry in the options. For that reason, I tend to switch between dated futures and perps. If perps are not costing me a lot of funding, I'd rather be long perps than futures because the cost me less. And then as perp rates go up, I'll switch back to futures. Basically, but not so well in massive acceleration to the upside. Yeah, well, you can still benefit from the smile if you continuously hedge, if you're continuously delta hedging, which is what I do in my systematic vol books. We're delta hedging periodically to zero delta, using a combination of perps and futures, and then we're just picking up the vol. And you can doing that surprisingly. If you delta hedge to zero delta, you can actually make money just by selling risk reversals because you pick up the skew. How do I calculate my return profile if I add a synth miner strategy? How do I have to adjust the option side of the strategy? Well, you'd have to switch off your auto hedging for the synth miner part of it because we don't delta hedge the synth miner. Because the synth miner is more about trading absolute value than it is about trading vol. Really, we like to sell higher vol, but it's more about ending up out of the money and picking up all the premium that we can. So it's a bit different. I hope that answers the question. I'm not entirely sure it does.
The most important question so far from Antoine: how does it feel to be a Thai star?
Well, it feels kind of funny to have your name mentioned on the news and have them they've got video footage of me signing a document and shaking hands with the chairman of a big firm over there.
Let me guess, the document was in Thai and you have no idea what it said.
No, they were very. I'll tell you what, doing business in Thailand is lovely. You get killed with kindness. Yeah. So they were very, very gracious to us, wonderful hosts. And at the end of being fed and listened to and honoured all day long, you kind of don't feel like negotiating very much. So you end up giving away things at a city lower price.
That's right. They soften you up. Yeah.
They're smart. I learned a lot from that meeting. Actually, it was really very interesting.
All right, we're almost out of time. A couple more questions here. Question from Paul: Is your risk management? Do you use some kind of cap on your delta/equity ratio?
We have an intrinsic cap because if we're selling 3 puts and 1 call, we can only ever possibly be long 3x our notional, 3x our NAV, because we can only ever be long. Like, if we hold a Bitcoin in collateral, we'd sell 3 Bitcoins of puts. So the worst case that could ever be is that we're long 3 puts net. And if we were long 3 puts, you can be sure as hell that we're selling 6 times calls at 40 or 50 deltas to try and recover it as fast as possible.
Mm-hmm. Question from Vladimir. Oh boy, I've noticed interesting stuff. When price of Bitcoin heavily drops, futures start paying much lower premium.
Yes.
When everything is growing, then premium is through the roof.
Yes.
So idea is next: buy, let's say 1 Bitcoin, sell a future against it, or delta neutral, buy back when the premium drops, and sell again when it rises.
Yes, I think that's a good strategy. You'll win on two fronts statistically, because so you're basically betting on a mean reversion bet, which is a reasonable bet, and you're trading the carry, which is again a reasonable thing to do. I think the only missing pieces of your plan is defining what low and high means. What is the low point? Where will you close out your carry trade, and where will you open it? What levels? Bear in mind, carry on Bitcoin can be anywhere between 5% and 50%. Depends on the time frame. I think if you're like selling 15% carry and buying 5%, that's probably a reasonable trade, right?
Yeah. A question from Johannes: watch out for tax stuff. You might not be able to offset gains losses with that. Yeah.
Oh yes. Rule number 1: live in a sensible jurisdiction that doesn't have communist style tax laws. Yeah.
Yeah. We should get some type of a referral for everyone who moves to Andorra.
Yes.
Have a kickback. Yeah. Core just made a comment here. Deribit did a great job on the updated position builder. Actually, I have not seen it, but they also did a good job on their, if you're trading perps, when you open up that order entry screen, it's quite nice now. It's kind of like what you'd expect in TradFi with the take profit stop loss. It's all built in. It's all quite slick and nice. They did a good job there. Slow but sure, they're really making a lot of improvements.
I can't promise anything, but I've had conversations where I have suggested that also gets implemented in options too. Because that would really help us, because how we always go through and put a buy order in at 5 bips for everything we've written. If we could do that as a take profit when we place the order, we wouldn't forget.
No.
So I'm hoping that makes it in.
Okay, I think. Hang on. Question from Vladimir. That was the plan regarding his strategy. Sell plus or minus 12%, buy back 5 or 6%.
I think it's a reasonable plan. I think it's reasonable.
Yeah, cool stuff. Hey, we've gotten about 10 minutes over time. Thanks everyone for joining us. And of course, if you want to join us every day of the week, you can check us out at roguetrader.academy or on Patreon, Rogue Trader Academy. That's it for Deribit Live for this Thursday, July 25th. Let's see what this weekend brings with this Trump speech. I'm sure we're going to see a lot of volatility. I wouldn't be surprised to see some insane price wicks. Who knows? It might be a big nothing burger. Maybe it's all built in. And he didn't come
usually is. Usually nothing happens.
Yeah.
If you
we'll see.
Get to my age, you kind of start betting on nothing interesting happening, and that's generally a good bet.
I dream of getting to your age, Richard.
I was going to say one more thing about Vladimir's strategy.
Yeah.
It's a good strategy. I think it's a good strategy, and there's another thing you could do to improve it. And I think we ought to actually do this strategy as a demo. If you end up selling, buying the perps, so you go naked when you're at 5%, or buying the futures rather, and then then the market continues to go down, you could actually rescue it by selling calls against the loss, and that's very similar to one of the strategies we run for some hedge funds. That's something we could probably showcase on our Patreon thing, because we were looking for another strategy to do.
There's no shortage of strategies to showcase, is there?
Yeah.
Fantastic. All right, that's a wrap. Thanks, everyone. We'll see you soon, Richard, and everyone. We will see you next Thursday. Happy trading, and let's see what the weekend brings.